Hey guys, so welcome to the next video in this course. And in this one, we're going to be talking about the engulfed entry. Now, this is something that's not been discussed before in detail, pretty much, especially throughout the whole technical course and fundamental course. This is something a bit different, especially, that I've discovered, trading more and more. And I feel like I should definitely bring some more light to it because it's one of the best ways we can actually get into trades that are a bit more confirmed. And also, um, even though we're not getting the highest risk to reward on these trades, they're a lot safer than any other type of entry. And we're going to talk about it in a bit more detail. So definitely bring out your pen and paper for this one because it's something that potentially you might be hearing for the first time. So, so far in smart money concepts, how do we usually confirm a trade? So what we usually taught is the way it goes is that you wait for your point of interest, you wait for a change of character on the lower time frames. So waiting for a break of this structure right here, for example, and then you enter on that pullback. Now, what happens sometimes is our entry will not pull back fully though. So one of the ways that we've talked about is potentially if you are trading this way, you could be entering on the imbalance and then potentially to take that higher. But what happens if it just starts to run off? And there's many times where this actually does happen. And one of the ways to go about it is using the higher time frames and using this engulfed entry technique. So what is it? What does it comprise of? It's pretty much all about breaking that a key level of structure. It involves seeing an engulfing candle that breaks out of this key area. And then also one other point, it can be applied to a range of time frames, but most effective on the higher time frame. And we're going to be talking about exactly which ones as well. In terms of positives, you rarely miss any entries, and also it's more consistent. You know what you're looking for exactly, and that's pretty much your entry technique. In terms of negatives, you might sometimes experience fake outs, despite the engulfing candle. Risk to reward is not that high. Like I say though, this is not completely a bad thing. You want to get that, you want to be more consistent than having sprees of just losing trades, even though your risk to reward is quite high. That's the way I'm viewing the markets more and more these days. And then the other thing you might experience some drawdowns at times, which is not completely bad because of course if we are trading on the higher time frame, this can be expected. You can expect on the lower time frame to have some kind of pullback before it completely blows off. In terms of the three rules that I always set for myself in this entry must be on the breakout of that key area as we've talked about, such as a high time frame order block. And I'm gonna give an example of what that looks like as well. Works well with certain time frames, but the time frames that I've found that works very well in 30-minute, 1 hour, 2 hour, and 4 hour, particularly this 1 hour and 2 hour time frame. That's mainly what we're going to be looking at. In terms of rule three, don't expect high risk reward trades. We can use this to get into a continuation, but expect this to reverse at some point as price gets exhausted. Now, in terms of the strategy, this is what I've talked about. Number one, the initial candle pushes into the point of interest. So let's just say on the higher time frame up here, we've got a supply zone. On the higher time frame as well, we're looking bearish, so we're looking to sell. We've now had that pullback to the top of the supply zone, and now we're just waiting to actually enter from this. What it's going to look like is price will initially push into the area. The candle then starts to react from the zone. So as we're moving into the zone, it starts to react to it. This may happen within one candle or a few candles. And then that last engulfing pretty much candle is what we're going to be looking at. It's that last candle that then reacts down to engulf the second candle. Like I said, though, this doesn't always happen within the three candle formation like this. There are times where it's a bit more exaggerated and it takes a bit longer. But essentially what we're looking at is we're waiting for this last candle to really engulf all of that. So what that means is we're waiting for all of that to break down below any of the body and also the wick as well. Generally, that's what we're going to be looking at. A few key points. This can work on all time frames. So we get this action in three major candles. The reason I say we want to look on the higher time frames because of this. When we're on the lower time frames, as you're getting closer there and there, you're going to get some kind of consolidation around this area as it's deciding to choose what to do. Now, what this means is you might get some lower time frame engulfing candles, but again, it returns back to the area and might even push deeper. This is why we stick to that high time frame, 1 hour, 2 hour, 4 hour. And that will give us more of a confirmation. Again, just repeating that point, it doesn't always happen in 3 candles. It can happen in a few more. But what we're looking is that engulfing candle that breaks down aggressively. And then you must look for this once we reach our point of interest, not at random places in the chart. So it's always going to be confirming our trades or confirming our points of interest. Now, I've got 2 case studies that I wanted to look at, and they vary slightly differently. But case study 1, we're looking at a buy position over here. We're in a buy trend right now, as you can see. We've got some liquidity over here that's going to be induced into this order block. So that's what we were looking at. In terms of take profits, we've got this imbalance over here, buy side liquidity at the top. And that's pretty much good to go. So we're waiting for this order block. One of the ways you can enter, of course, is just leaving a limit entry and then waiting for that to happen. But what if we wanted to confirm it? What we'd wait for is this. Once we see, first of all, this move into the point of interest. So as you can see, the sell candles, sells, sells, sells. We want to wait for it to get, actually get comfortably within our point of interest. Now we're starting to see that it's starting to reject. Obviously, you can see a flip of the candle. So here it sells. Here we start to see the first buy candle within that area. That other candle, the engulfing candle, is what's that confirmation that we're going to be breaking above. Now, this right here is a chart on the 1 hour chart. So because we've had that break above, engulfing all of these candles here above that point of interest, we're now comfortable to know that we can start to buy this. So we wait for the closure of that candle. So this engulfing candle happens. We wait for the closure, entry pretty much at the closure, stop loss below the lows that we've seen. And that would be our entry. Of course, you have to be wise with your take profits. Don't extend it to a crazy amount. You want to look for it to reach certain areas that are easier to reach to. One example is this imbalance, because we know that once you reach an imbalance and it hits an order block, potentially might start to reverse. So this would be a nice area. So I hope that all makes sense. All we're looking for is that engulfing candle once we reach that point of interest. Case study number 2. This one's slightly different. I wanted to give this example to show you that it does work even when it doesn't happen within 2-3 candles that we talk about usually. So just to explain the scenario again, in a buy trend, we did get a nice mitigation over here, and then price slowly started to move upwards. We created equal highs at the top, and then now we're looking for a continuation of that trade to the upside. So a slight pullback to our point of interest here that hasn't been really touched on the way upwards. And we're going to get into the engulfing candle in more detail here. So the entry is when the engulfing candle closes, enter it with a stop loss below the low in the point of interest, like I've said. As you can see here, price moved downwards. A lot of price action around here, but nothing really significant happened. So we wanted to wait for that proper engulfing candle, and this one over here is the one that we were looking at. As you can see, once that closed, we want to wait for that close, enter straight away, and then stop loss just below the lows, and then take profit. I haven't shown the whole chart here, but we were aiming for not only this equal high, but also some other liquidity point later on. So this is the way these trades are going to look. Again, you compare them to the lower time frame. With these ones, you don't really have to wait on that pullback, because sometimes you get this, as I've talked about. Sometimes when you're on the lower time frame, you're waiting for this pullback to always happen. It doesn't always happen. I'm telling you, you're going to be missing out on quite a few trades if you're always waiting on this entry. But if you're entering on something as the engulfing entry strategy, you're going to be getting more hits. Obviously less risk to reward, but we're going to be sticking to that high time frame again and again. So my takeaway lesson here: enter the trade once you see a high time frame engulfing candle, break past the point of interest. This way we can avoid entering, we can actually enter more safely. That's meant to say. But yeah, guys, I hope that explained everything, in detail. I'm going to be talking about it, more and more. You're going to see within the Discord, this is the type of entries that you'll be seeing from time to time. But yeah, I hope that all makes sense. And yeah, take care, and I'll see you all in the next one.